You're listening to AI Prism from Seoul Economic Daily.
If you hold Korean Semiconductor ETFs, a single rebalancing event drove Samsung Electro-Mechanics up 18% in one session and down 8% the next, with no fundamental news either way. The world's third largest sovereign wealth fund arrives in Seoul next week, and the $1 rate just logged its 18th consecutive day above 1,500. The ETF volatility story is the one that most directly affects what individual holders are sitting on right now. It's Friday, June 12th. Let's look at what this means for retail investors in Korea. Korean markets have swung sharply this month. Kospi reached 8,933 intraday before pulling back below 7,800, a range of over 12% in under 2 weeks, as foreign investors extended their net selling streak to 24 consecutive sessions. The selling is driven by Middle East risk aversion and portfolio rebalancing, not a fundamental reassessment of Korean corporate earnings, which remain strong in the semiconductor sector. Three developments this week are creating competing signals for holders of Korean equity exposure, and they point in different directions. Let's start with the ETF mechanics story, because it's the one that catches holders off guard. Here's what the numbers show. The Codex AI Semiconductor, top 2 plus ETF, rebalanced in May, lifting Samsung Electro-Mechanics weighting from 0 to 27.36% in a single event, making it the largest holding ahead of SK Hynix and Samsung Electronics, and driving ETF holdings in the company to 3.6 trillion won, roughly $2.4 billion US dollars. Samsung Electro-Mechanics then swung 18.39% higher on June 9th and 8.38% lower on June 10th, a 26-point range in 2 sessions driven entirely by those mechanical flows rather than any company-specific news. That's the kind of move that looks like a fundamental catalyst but isn't. If you didn't know the rebalancing calendar, you'd be trying to explain it with earnings revisions. Dhabi Investment Authority, the world's third largest sovereign wealth fund with assets exceeding 1.2 trillion US dollars, visits Korean asset managers on June 18th to 19th, with industry estimates placing its initial Korea commitment in the hundreds of billions of won range. The $1 rate closed at 1,528.9 on Thursday, its 18th consecutive session above 1,500, driven by Middle East risk aversion as the U.S. escalated signaling toward Iran, and Iran raised the prospect of Strait of Hormuz restrictions. Financial regulators also declared a household debt emergency, with banks now discussing capping revolving credit lines at 50 million won, roughly 33,000 US dollars, a measure last used during the 2021 pandemic low-rate cycle. So what does this mean for retail investors with Korea exposure? Earlier, we said ETF rebalancing drove Samsung Electro-Mechanics up 18% with no fundamental news. For holders of Korean Semiconductor ETFs, tracking rebalancing schedules and weighting caps is now as important as tracking quarterly earnings, because mechanical flows are moving stocks further than results do. The ADIA visit on June 18th to 19th, combined with earlier visits from Yale and MIT endowment teams, suggests long money sovereign investors view the current Kospi correction as an entry opportunity, which means the 24-session selling streak may be approaching an inflection point. For overseas holders of Korean equity products, the sustained won weakness above 1,500 compresses existing dollar-denominated returns and simultaneously reduces the effective entry cost for new positions. Watch the ADIA visit outcome and any BOK rate signals in the following week as the two near-term catalysts that will shape the next positioning window. That's today's AI Prism, Retail Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Juan Ifra award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.